What a spectacular open. Price skyrockets and reaches Fibonacci reversal zone within seconds after open. This day trading Fibonacci reversal zone correlates very clearly with long-term trend level. Within seconds, price reached reversal zone at the open. Trader who chooses to stay in a trade at this level will walk through a lot of pain. Trader who understands that this is key Fibonacci target, moving his stop outside of break-even. It's a brick wall. Trader who trades large position adjusts his trail very close. Trader who trades small position out completely. Everyone clear on this? On long-term trend chart, price has more space to this level. But this is a very powerful resistance. And it when correlates with reversal zone on day trading chart, you want to take your profits off the table. If you don't, what is the best case scenario? Pain and torture. So, if I will show you a few other instruments that had done this, you will not be surprised. Here is a reminder. This was Apple. For 3-4 months. In April, in summer, in October 2018. Before Apple did this, despite stunning earnings. This is Apple now. Not the place to buy, the place to exit. However, Apple reached trend inception, Fibonacci reversal zone, and rallying. This is what price does 80+% of the time. As confirmed by students all over the world who trading the method. Doesn't matter if it's little chart on S&P or long term stock, such as Apple. In day trading room, you see accuracy of the method instantly. So trader who chooses to stay in this trade is in a whole lot of pain. Not the place to buy, the place to exit. Clear on that? This was exact same thing on Amazon. Look at that. It's a reversal zone. Not the place to buy, the place to exit. Spectacular earnings don't mean a thing. Fibonacci reversal zone mean everything. Correct? As expected, Amazon collapsed. $700 per share. Agree? And that remains the key. Thank you so much. So, no matter what you trade, price action remains the same. The only difference, risk management and trade hold time. Reversal zone, not the place to buy, the place to exit. And this is gold in 2019. Take a look. This is gold in 2016 at reversal zone, chart present in the room for years. This is gold in 2017. This is gold in 2018. Not the place to enter, the place to exit. Correct? So, this is where sell-off on gold had ended and reached trend inception, Fibonacci reversal zone. No surprise where buyers stepped in from. Bullish rally on gold overextended. Gold in pain. Just like S&P in front of you. 3 minutes after the open. Just like Tesla for the last 3 years. Not the place to buy, the place to exit. This is proprietary Fibonacci tool you can install on any platform you choose to trade on. From Ninja to TradeStation to Thinkorswim to Interactive Brokers to MT4 to Sierra Charts to MetaStock. Students all over the world trading the method on any instrument, any platform, any time frame you choose to trade. When price comes to reversal zone, not the place to enter, the place to exit. Price collapses 80+% of the time. Price freezes in correction 20% of the time. As you're witnessing in front of you on S&P. Agree? So, exact same formula applies to pound. Pound reached trend inception. All the disaster in Britain, however, pound rallying. Why? Because Fibonacci reversal zone had been reached. And this exact same formula applies. Not the place to enter, the place to exit. Trader who enters into Fibonacci reversal zone, best case scenario, pain and torture. This is S&P weekly chart, the most popular chart for long-term position traders. And this is 2018. Not the place to enter. When S&P collapsed from 2900 to 2300. Agree? And that's exact same thing you're seeing in front of you on S&P. So, day trading chart in brutal correction. Long-term trend chart still has space to the upside. And if I convert this long-term trend chart to 5 minutes, you will see the power of the method. No matter what you trade. Bright pink line identifies the end of the minor trend. Ultimate resistance, where S&P had been in pain since Thursday. And we watched S&P in pain yesterday morning. However, our bias remained firmly bullish. This level in the room since last week. So, powerful day trading resistance, more space to the upside. And that remains the key. Correct? Just like Apple. S&P in pain. Just like Amazon. Just like gold. It's all the same. Here's another reminder. Here's oil at the start of 2018, showing you very clearly Fibonacci reversal zone is next at 77. And this is gold oil at Fibonacci reversal zone. Many months later. No surprise. 64 is out, key Fibonacci resistance, as you're seeing right now on S&P and gold oil in sell-off until 55. 55 is out, oil in free fall. It's all the same, no matter what you trade. Very different strategy, exact same Fibonacci levels. When price comes to trend inception, look to enter. Rules are met, take a trade. When price comes to trend exhaustion, look to exit, no matter how bullish the news on oil is. Agree? So, oil right now at key Fibonacci resistance. Exact same place where oil had been 2016, 2017, taking oil a year to break through. This is where problem on oil again. All the same. So, S&P in a whole lot of pain in bearish correction. Everyone will be much better off if S&P will go into free fall. Trade is not on 1 minute chart. Trade converted to one so you can see to the tick the power of Fibonacci reversal zone and how you can benefit from in your own trading decisions. This is exact same chart on Euro in 2014. Do you remember this? Euro at 3900, not the place to buy, the place to exit. And this is S&P in front of you. Anyone surprised? Should not be. And this is the power of Fibonacci. No indicator on the planet will give you. As you saw at the open, Fibonacci reversal zone identified in advance. If you're using Fibonacci reversal zone on long-term positions, you know your trend reversals, hours, days, weeks, months, and years in advance. All depends what chart you use. Agree? And that's the key. So here's IBM. Everyone seeing this? IBM sold off from 180. Fibonacci reversal zone and bullish rally started at trend inception. Fibonacci reversal zone. Exact same formula applies. And this is what IBM looked like 6 weeks ago. In correction. 126 blocked bullish rally. It was not the place to buy. Drastically different structure now. Nothing in common. Only if rules are met, you can take a trade. You never short into reversal zone. You monitor for reversal. Identical Fibonacci levels. Very different strategy. And this is VIX. Hedge fund managers in the course trading VIX. VIX sold off from Fibonacci reversal zone in 2017, 2018, and at the start of 2019. No surprise, not the place to buy. Agree? And this is S&P in front of you right now. In a whole lot of pain. Just like IBM, just like Apple, just like Euro, just like Pound, just like Amazon. It's all the same. And my favorite chart of 2018, 2019 is Netflix. Why? Because every single time Netflix come out with spectacular earnings, Netflix is crushing. Let's find Netflix. And this is the reason why. Take a look on Netflix. Spectacular earnings don't mean a thing. Look at that. Spring 2018, October 2018. And this is 2019. This is the end of the minor trend. Netflix collapsed more than $160 per share. Spectacular earnings don't mean a thing. Fibonacci reversal zone means everything, not the place to buy. Just like S&P. What an open. Agree? Here's another trade in a progress. What is the problem? Market extremely high. On this trade, as you saw on the trade before, this is a level that's a problem. Every single trade, different stop, different target. Trader who chooses to buy now, in a whole lot of pain. If you don't like pain, you don't buy this high. This is a place where you exit. This is where we've been for the last 30 minutes after open. I agree? So here we go, traders. This is the end of the minor trend in front of you. There are two drastically different trades. This trade is drastically higher at ultimate brick wall. Major news in 1 minute. Entering trade into the major news is not a wise thing to do. Moving your stop outside of break-even and protecting your profits is. So here we go, traders. S&P in a whole lot of pain, as expected. Anyone surprised? Should not be. It's a critical Fibonacci resistance. Let me remind you. This is S&P in 2016, 2200 number. This is where S&P had been frozen for almost a year. And as you can see very clearly, 2300 next, after the election. And this is day trading chart in front of you right now. Two drastically different trades. Market extremely high. Drastically different target. Drastically different range on every trade. So, if S&P is gonna do on day trading chart right now exact same thing as S&P had done on weekly, price extremely high. Everyone clear on this? What is a basic formula to be on the right side of the market? Buy as low as possible, sell as high as possible. Right now, there are absolutely no shorts in a play. None are present. Everyone with me? So, if market crashes, it's a gift. Bullish rally overextended at day trading resistance on every single chart. I agree? It's a beautiful thing if you know where these Fibonacci levels are. So if S&P collapsing, it's a gift because we are extremely high. So if you witness the power of Fibonacci and price action and indicator-free method that applies to any instrument, any time frame, please review the information on the website, as a variety of courses available, where you learn indicator-free method. In Foundations course, you start with basics of the method. In Mastery course, which is 12-week course, you master all the strategies you've seen in this video. 12-week course, 4 days with students. Guided live trading included, pre-market analysis. All classes recorded, key classes Monday and Thursday. You can start viewing videos the moment you sign up. In private mentoring, when I work with you one-on-one, via screen sharing and Skype, you also have access to all group classes. Every single trader, different account. Every single trader, different platform. Trades different instrument. So, any questions? First, please listen to the students and see what students do and trade. Agree? Students from beginner to hedge fund manager, sharing on the website what they trade. Options, stocks, Forex, ETF. Since 2011. And if you would like to listen to Facebook reviews and hear students' podcasts, you can see the traders from beginner to hedge fund manager, trading the method in US and globally. So, any other questions, do not hesitate to contact me at 925-257-4298 or info@fibinstitute.com. As we've been waiting on S&P to crash and burn, will it do exact same thing as Apple, Amazon, Euro, Netflix, gold and oil had done? It will be a beautiful thing. It will be a gift to knowledgeable trader, because this is not the place to buy, the place to exit. And that's a dance in the market for the last 30 minutes. Rules are met, take a trade. Never ever ever enter into Fibonacci reversal zone. This was expected.